St. Patrick's Day holiday for those people who celebrate St. Patrick's Day. I think that holiday doesn't get much credit because it's just when no one takes off. You still have to work. You still have to go to school. So it's just a lot of people are very passionate about St. Patrick's Day. Anyways, we're in the 11th week of the year. And as you've seen, it has been volatile, and it is moving, especially in the banking sector. By the way, the banking sector would be considered where that crash happened in less than a day for the one bank, SVB or SIV, whatever. Anyways, that would be described as a black swan event, something that was hard to see coming. The speed of that crash, of why that happened. But I thought that was interesting. So, but then the market is always changing, everybody. Just is, and so you got to learn to deal with it. That's what we're going to talk about. I'm Steve Peasley, and I'm here today to answer any of your questions on this podcast and radio broadcast. Any of your financial questions about strategies, decisions, where you're going to go, when you're going to retire, what age should you retire, and 401ks, IRA, whatever you want to talk about, we'll discuss it as long as it's financial, okay? So that's what we do here. For those who are new to us, let me assure you that I'm not going to be pushing. We don't push anything. I provide straight and unbiased answers to questions. And we're not trying to sell you anything when we're answering those questions. Okay? This is not, we just want to provide the information. One thing we have all noticed by now is that the investing situation today, the stock markets, very different from just 2 years ago. For 10 years before that, you just buy and it would go up, right? That's not true. And now we're feeling that, okay? We're feeling it. I do think, as I've told you before, I think by the end of the year, the market may be turn itself around. I think that's going to happen. I really do. I think you can hold me to it, and then you can call me and tell me if I was wrong or right by the end of the year. How's that? So, but we all are here to learn some new things. I know you do. We've got many variables out there that we all have to consider, not just the individual stock, but the background of the economy and what the Fed is doing, all those things. That's what we do here. Okay? So, my focus point today is what are the sectors to watch for bargains and undervalued stocks? Okay? So, it's Brzezinski. She wrote that article. We'll talk about that. Of course, I got other things, time permitting. I want to talk about the banking crisis and what it means for the Fed, the Federal Reserve, as far as what they're doing with interest rates and their policy going forward. Okay, also, should you invest in banks after the crisis? Would banks long-term be a place to be? I'm not talking about investing now or trying to pick a bottom. I'm talking about should be bank sector be where you should be based on their prospects going forward. And Warren Buffett, he has 4 banks. He lost billions of dollars. So we'll talk about that a little bit. And France raises its retirement age. Raises it. You know what their retirement age is compared to ours and other countries around the world? So we'll talk about that a little bit if we can get there. All that means only if you don't call. If you call, we won't be able to get to any of this. But if you do call, I'll be able to answer your question. So give me a call. It is Friday. I will share highlights from my KPP Premium newsletter as well. That's coming up about the halfway point of the podcast. So I've got all this planned for this episode of the podcast. And, of course, I'll take your live calls at 888-99-CHART. So how'd the market do real fast? The Dow was down 385, the Nasdaq was down 87, and the S&P was down 44. Not a great day. Let's go to our first caller, Chris in New Hampshire. Hi, Chris.
Hey, how's it going?
Good. How you doing?
Oh, doing quite well. I was calling with a question about NYCB, New York Community Bank. Like most banks, it's down dramatically. I bought some about a year ago and was wondering if it's one of those ones I should just take my losses and get out of, or if it's a opportunity to buy more.
Did you buy it because of the dividend? Because it has a pretty high dividend.
Originally, I didn't know. I just about a year ago was reading that banks overall were undervalued, and it was paying not quite as good of a dividend back then.
Okay.
Obviously, it's paying an amazing dividend now, but.
Yeah. This is NYCB, everybody. New York Community Bank Corp, holding company for the New York Community Bank and New York Commercial Bank, offering, they're operating 237 offices. It makes money. It's going to make $1.08 this year. That's down from $1.23, and then rebound next year to $1.23 again. And it's a $6.54 stock. So it's really inexpensive. So I'll put it this way, Chris. I don't know what their balance sheet is and how much assets they are actually exposed to, 10-year treasuries like that bank in San Francisco was, or exposed to, it's not like Silicon Valley Bank where they're exposing themselves to all these upcoming companies with the venture capitalists supported, and all their billions of dollars are kept in these banks that could just disappear quickly. Anyway, so I think this is a pretty solid bank. I think if it was me, if I don't have a huge position, I'd probably add more. That's what I'm going to do.
Right.
We're still.
Great.
The only trouble is, thank you for the call. Appreciate it. We're still in this mini bank crisis, so it's hard to. I'm kind of hard pressed, but the value is there. Well, but as long as their balance sheet is in order, not crazy like other banks were. Here's a reminder, everybody, there are only 5 days left to register for the new free InvestTalk Wealth webinar. Value investing, positioning your portfolio on profitability, relative price, and dividend payments. So you got to head over to investtalk.com and register. And now the InvestTalk phone lines are open. I am wanting your financial and investment questions at 888-99-CHART.
Thank you, and I hope to be the 50 millionth download of your incredible show.
It is official. As of February 21st, an exciting new InvestTalk milestone was achieved. The InvestTalk podcast exceeded 50 million downloads.
How do you guys determine a value stock?
50 million.
Just wanted to get your opinion on JP Morgan and BAC.
Hey guys, this is Josh from South Carolina. I'm a long-time listener.
24/7, rain or shine, on tough market days or during brighter moments. Justin Klein and Steve Peasley are ready to answer your questions.
All right, now a preferred share is kind of a hybrid asset. It's part of the capital structure.
You want to buy this what's on sale, and when it gets on sale, it's about $16 a share.
50 million. InvestTalk. 888-99-CHART. Everybody wants a secure financial future, but getting there takes strategy, discipline, and the right information. That means you'll have finance and investment questions. Steve Peasley is ready to provide his unbiased answers. So don't forget to call InvestTalk. 888-99-CHART.
Hey guys, this is Josh from Tampa. I'm just calling to ask a question about Silvercrest Asset Management, ticker SAMG. I've been following the stock for a while, and it's had a bad month, down about almost 20%. And I opened up a position Monday at the lows, just a small position, less than 1%. But I was just curious on your opinion of it, and if you think I should add more or get out of it. And I was also just curious about your guys' opinion on the asset management space, just in general. Thank you for the question. Have a good day.
Okay, this is Silvercrest Assets, SAMG is the symbol, provides financial advisory and related family office services to ultra-high net worth individuals. this is a very small company. It's a $155 million market cap. It does make money, has made money. It's been very steady, but in recent quarters, sales have been down. So it's a stable company, paying a 4.4% dividend at $16.30 a share, and it's going to make $1.80 next year, which is a nice bump from this year. And this year will be a bump up from last year, about 13-18%. So those are positives pushing this stock forward that would mean that I would want, you might want to consider it. Management owns 10%, which is good. But it is a very small company. The smaller the company, the higher the risk, and the one thing that would turn me off is how small the company is. Appreciate the call. 888-99-CHART, 888-992-4278. My focus point today concerns the story behind the question, what are the sectors to watch for bargains for the undervalued stocks? So this is an article that I picked up written by Susan Dobrynski, and she's the undervalued stock she's picking. And remember, you can use any criteria you want to determine value. Okay, you can emphasize this one characteristic of the company over this other, and you could say it's undervalued. So you got to take everything with a grain of salt when they say the most undervalued, based on they're assuming what on how to configure that number. Well, they took a list of 128 companies they liked, and part of that is from the Morningstar group, and they looked at them and said these companies have significant competitive advantages. They're very stable and are growing. Now, what are some of the 10 companies? Comcast is the top of their list. Taiwan Semiconductor. Roche. Roche, that's a drug company, right? Everybody knows that Roche is a Switzerland drug company. Walt Disney, okay? Equifax, TransUnion, International Flavors and Fragrances. I bet you most of you probably never heard of International Flavors and Fragrances, but they've been around a very long time, and they do have a very stable business that is going to hang around. So I just want to warn you, I have no problem with this list. I kind of like some of these stocks quite a bit. But I do have a problem when you will read the 10 best of this or that when it comes to the stock market, that you have to understand what they consider best. How do they determine that best meets the criteria? What is that? What? Low PE, pays a dividend, paid a dividend the last 10 years. What criteria are you using? So don't ever buy a company just because it's on a best list. Okay? Do your own homework. You can do it. It's not impossible. It just takes time, but it's kind of fun to do. So I would consider that. Okay, 888-99-CHART. I'm going to talk about the banking crisis and what that means for the Fed and their fight against inflation. Should you invest in banks after this crisis is over? Long term, I'm talking long term. Should that be someplace you want to be? And France changes its retirement age. They increased it, which surprised the heck out of me, because France usually is not that kind of government, to take away some benefits from their citizens. And remember, the citizens may not put up with it, so they're pretty boisterous. Jess and I are thankful for your podcast support, and our free downloads will continue. I want to make you aware that there are two other ways you can find our material and unbiased guidance. InvestTalk has a YouTube channel and an Instagram following. We're building out more and more content on these things, so go to YouTube or Instagram and search InvestTalk. Remember, there's 2 T's in InvestTalk. And please tell your friends and family and everybody you know. The InvestTalk phone lines are open, 888-99-CHART.
Steve Peasley is here and ready to take your calls live. InvestTalk, 888-99-CHART.
Hey guys, my name is Jerome. I'm calling from Massachusetts. Thank you for everything you do. I'm a new listener. I'm actually trying to be a new investor. I've been trying to get information, and I'm pretty sure you've probably tackled this before, but I would be grateful if you could just, again, talk to a new investor, just a couple of highlights on what we need to do. I know for sure that I've been advised, make sure you've covered your dates, you don't have any major outstanding loans, which I've managed to do. You have an emergency fund on the side, which I'm building. I've had somewhere that it should be about $3,000 minimum, or at least 3 to 6 months of your salary. Anyway, I am building that. So I was thinking of getting to the actual investing. I would appreciate any tips or ideas on, what steps to follow, what to look out for. I need to be looking out for as I actually get into the actual investing process. Thank you very much.
As a beginner, you probably should stick with indexes until you become much more informed about how to evaluate stocks. And when I say an index, like you can buy what's called an exchange traded fund of an index like the S&P 500. Several of them. You can buy also the Dow, which is 30 largest stocks. Well, maybe not the largest stocks in the index, but 30 very, very large stocks. The NASDAQ. The NASDAQ is 100 of the largest companies selling on the NASDAQ exchange. There's two main exchanges. There's a New York exchange and the NASDAQ exchange. So the companies are listed on one or the other. So you start with the indexes. That's what I would do. That's what you probably should do until you become much more familiar with investing. You open up an account at any of the big houses, the discount houses, and say, I want to buy an index of the S&P 500. Or you just give them the symbol of the company you want to buy, and you can do your trade yourself, then you know who you go with. Anyway, so that was a great call. I appreciate that. I really do. Okay, 888-99-CHART is our number, everybody. Time to give us a call. Now, if you've sat back and thought about this mini banking crisis that we are over with or still in the middle of, I don't have any idea yet. No one knows. You only look backwards. But this banking crisis is helping the Federal Reserve fight inflation. Now, how is that? Well, everybody's used to speculate, everybody meaning the investment community out there, that the Fed was going to raise 0.5%. Now everybody thinks they're either going to raise it not at all or 0.25%. Why would the Fed do that? Because the Fed knows the economy will slow down. What do you think these banks are going to do? They're looking at some of them looking at their balance sheets. I say, oh crap, we're in really big trouble. There could continue to be certain runs at certain bank. So what they do is, we got to tighten up our standards. If we get through this crisis, we got to tighten up our standards. So the thinking is, if you're going to tighten up standards, that will slow the economy. And slowing the economy is what the Fed has been trying to do so they can get rid of inflation or at least reduce it. That's the theory. So the bank crisis is helping the Fed. Now, also one thing, does this mean that they're at a peak of raising interest rates? I think that they might very well be, depending on what else happens from the next week or two. Remember, they're meeting next week. We're going to have this numbers next week. But looking forward, they're going to, really consider whether this bank crisis really is going to, cause a real contraction or not in the economy. We'll see. We'll all see. On Fridays, I generally make time to do a quick rundown on the key benchmarks numbers. 2-year Treasury yield, 3.94. Last week it was 4.68, if you remember right. So it dropped down to 3.94. So, and of course, a little over a year ago, it was like half of 1%. So it's gone a long ways. The 10-year Treasury yield is 3.39%. Last week it was 3.73. So that's the 10-year. Okay, and remember they were paying what? About 50, I got 57 weeks ago, they were paying 1.98%. Now they're paying 3.39%. So when the Federal Reserve raised the rates over this last, so time last year, that increase in rates has put a lot of pressure on banks who have 10-year treasuries. They thought they were buying safe things, but if they did, they buy too many. You didn't spread it along the risk curve. There's, the risk curve meaning by 1 year, 2 year, 5 year, 7 year, 10 year, whatever trades are out there. So you can, you don't expose yourself to any one sector. But those who did have lost billions for their bank because of the value of bonds go down when interest rates rise. Interest rates go up, the value of the bond you're holding while interest rates are rising, if that goes up, the bond value will go down. Just remember, that's how that works. Gold, $1,980 an ounce. We really had a good week because of the fear factor. Remember, what drives gold? Fear, the dollar, U.S. dollar value, wars, insurrection, that drives gold. So fear about the banking sector drove it this week. 888-99-CHART, everybody. We're heading into a break. Our phone lines are open. 888-992-4278.
Dr. Rick here. Another sign you're becoming your parents is getting particular about details that don't matter.
The craziest thing happened when we got tacos the other day. Was it Wednesday or Thursday we got tacos? I know it wasn't Tuesday because that's when I went to my hairdresser. Shoot, what day was it?
See how we all lost interest there?
Progressive can't help you from becoming your parents, but we can help you compare rates on home insurance with Home Quote Explorer.
Progressive Casualty Insurance Company affiliates and third-party insurers. Comparison rates not available in all states or situations. Prices vary based on how you buy.
Now, each time I host the InvestTalk podcast, I have the satisfaction of taking caller questions and then breaking down the often complex dynamics involved. If you've never called, don't hold back. You can leave your InvestTalk questions on the 24/7 anytime listener line at 888-99-CHART.
888-992-4278. We're going to go talk to Taylor in Philadelphia. Is it cold in Philadelphia, Taylor?
It was pretty nice yesterday. It's cooling off a bit today. How about in California?
Well, it's been pretty chilly. We've had a pretty cold winter for us and wet, which is really unusual for Southern California.
Cold for you is probably still warm for me, Steve.
Yeah, that probably is.
So I was calling today. We recently did a rollover IRA for my wife's 403B. So it's effectively tripled the funds that we're able to direct ourselves. So it's a big lump of cash right now. And as we start to take some bites into the market, I wanted to kind of get your opinion on a strategy about sectors that we should be thinking about for 2023 to start ripping off some pieces. And then I was thinking of SPSM, the S&P 600 small cap, as a good place to start. I want to get your opinion on that.
I actually have no problem with that. I'm not sure we're done with our bear markets push yet because of this little banking thing going on now. But I do think this is the year that probably you want to be buying into stocks before the end of the year. I think by the end of the year, the market will be in a bull phase. So, start dipping your fingers into value sectors. I have absolutely no problem with it. I think that's a smart way to go. So, yeah, you got a thumbs up from me, Taylor. Good thinking. Appreciate the call. 888-99-CHART, 888-992-4278. Okay, should you invest in banks after this crisis? Let's say that crisis is way behind us now. We're 2 months afterwards. Everybody's calmed down. Then, should you invest in banks, period? Not by whether they're good value or bad value. I'm not talking about that. I'm thinking the whole banking sector. And my opinion is somewhere I don't think I want to be for a number of years. Why? Because of the banking crisis and the fact that the U.S. government is backing up all these banks, all the deposits forget about FDIC insured stuff, except for you and me, of course, in a little small bank we might be using. FDIC insurance is all we're going to get. We're not going to get backed up. But because of these are all big, pretty big banks, pretty big, not all of them, some, but because they let one go. But the Federal Reserve, the U.S. government is going to pass more rules and regulations, more of them. And I think it's going to constrict profits, constrict them sales. I think the banks themselves are going to constrict now this next year for the next 12 months because they're nervous about the capital structure and they want to make some moves and be more conservative. So then you're going to have the government, I think, because they're backing up, they're already sort of nationalizing the banking industry with this move. So what makes, I just don't know, I don't think I have any faith that they won't be overboard. I've seen this many times. They go overboard with the rules and regulations. It's going to really constrict growth for banks. So, unless it's one of the really big international type of banks that pays a really nice dividend, I probably won't be interested in that sector. Anyway, so I thought I'd pass that along. Okay, let's go to Edgar in San Diego.
Hi, Steve. How are you?
I'm good. Thanks for the call. Appreciate it.
Oh, sure. Thanks for taking my call. Steve, I've been keeping my eyes on Pioneer Resources for almost about a little bit less than a year, and I believe, it has a lot of potential and has a good dividend. What is the entry point? Now it's coming down. Looks like it's getting very close to 52-week low.
Yeah, I think that looks like a good entry point. I'm with you on that 52-week low because it looks like it went down there before, hesitated. So that what is that number? About 170. Okay, somewhere 170. Right now it's selling for 182. Everybody, we're talking about Pioneer Natural Resources engaged in exploration and production of oil and gas in the United States. Well, it pays a 15% dividend. I'm not sure they're going to be able to do that, but they have cash flow of $43.75 a share. That's huge. Now they're going to make $23.30 this year in earnings, $23.65 next year, the estimates. So this year's is down and next year's is flat. So, but you buy this because of where they are, because I like that sector, engaged in exploration and production of oil and gas in the United States, because they're still growing their sales. They're very low PE. They're at a 6 PE ratio. Return on equity is 34%. These are really huge and safe numbers. So, yeah, I kind of like it. If it fell more and it fell, next support probably be about 140 something or 140-ish, I'd buy more. Appreciate the call. Thanks, Edgar.
Down.
What if it goes down?
So suddenly going south. It was like it was above 200 about a month ago or so. Yes.
So it's in a bear market phase now. It has been for almost 9 months. So it's gone down, up. It's just, that's how the market works, but it's really inexpensive. So on a value basis and a dividend basis, if you just be patient, you'll make a great return on it. If they paid 15% next year and they had it for 2 years, that's 30% on your money. If they continued that 15% dividend, and they had no reason not to, because they're making a lot of money. Yeah. So, anyways, thanks for the call. I appreciate it. Thank you. The premium KPP Premium newsletter was finished today, and it will be distributed to subscribers tomorrow morning. In the market conditions section, there's only 4 sections, everybody. And I'll talk about the market condition sections, which is the first section of the newsletter. We had another week dominated by fallout from the ongoing stress on regional banks, and markets were set to post a weekly gains of 2.5% about halfway through the trading day. The big news over last weekend came in the form of government response to the Silicon Valley Bank collapse. In order to restore confidence and ease worry regarding the safety of smaller banks, the regional banks, the Treasury Department announced a plan to backstop all deposits at SIVB and the other SBNY, as well as create a new lending facility to banks that may be facing liquidity issues. So that's what I meant by the government is backing up all the banking sector, and I'm not convinced that's a place you want to invest. Now, also in the newsletter, the banks on Wall Street took matters into their own hands on Thursday, as some of the nation's largest banks announced that they would be depositing around $30 billion in the First Republic Bank in order to shore up confidence in their deposits. So even the biggest banks got involved with trying to stop this little panic run. Okay, so that's not unusual. And to me, we saw in 2008 when we had the previous banking crisis that the federal government stepping in and buying banks and making new rules and regs. And this time it's even, back then they increased just I think the insurance on the FDIC insurance to $250 from $100. And now it seems like it's unlimited. But probably only for the banks that matter, not the small ones. Probably not. Also in the newsletter, the CPI PI number were released this week. Inflation rose month over month, but was in line with expectations. CPI rose 0.4% for the month, putting the annual inflation rate at 6%. It's worth noting that most, if not all, of the recent inflation prints have been the result of the cost of shelter and base effects. Shelter and base effects. Okay. Additionally, the producer price index, which gauges wholesale prices, slowed to an annual growth rate of 4.6%, producer price, so at the producer level, significantly lower than both the 5.7% print in January and 5.4% estimate that the economists surveyed expected. So, not too bad. It looks like maybe we have a peak in the inflation rate, which is, it's fine. We expected that. And, it's not going to go up forever, right? We knew, with the Fed raising rates last year very strongly, we knew it wasn't going to, economy wasn't going to be pushing inflation higher. So, anyways, sector, stock idea sector, a company that develops and manufactures generic pharmaceutical products sold across the world. The company specializes in low-cost, easy-to-produce small molecular generic drugs and active pharmaceutical ingredients. So you'll have to figure that out. The company's sales are well dispersed across North America, India, and other emerging markets. It's extremely liquid. So, the stock has recently bound off a low. So the other one, the world's largest supplier of semiconductor manufacturing equipment, providing materials engineering solutions to help make nearly every microchip in the world. The firm's systems are used in nearly every major process step with the exception of lithography. The firm has the broadest product portfolio and offers customers the closest thing to one-stop shop. The company has a healthy balance sheet with a debt-to-equity ratio of 4.46. Semiconductor sector should also have a nice tailwind. So, from that, the tailwind from the CHIPS or the CHIPS and Science Act passed by Congress. It was $4 billion. A lot of money given to the chip sector for, me, I don't like that. Didn't like that at all. Okay, let's grab another question, caller. 888-99-CHART.
Hey, Justin, just had a question for your podcast. Love your show. I'm interested in ticker symbol CARR, Carrier. Let me know your thoughts, and I'll be listening on the podcast. Thank you.
Carrier Global Corp is a very good company. It designs, distributes heating, ventilating, air conditioning, refrigeration, fire security systems. It's a $36 billion company, so it's big. It's really big, especially for the sector of the market. I mean, they're one of the leading, if not the the leading maker of those things or distributor of those things. They're going to make $2.56 this year. That's up 9% from last year. And then another 11% gain next year to $2.84. It's a $43 stock. Okay, $43 tells you that the PE ratio is, not cheap. Okay, around 19 or so. And its range, 5-year range, is 6 to 28 on the PE ratio. So it's, it's right in the middle of that, or middle-ish. And so it's not a cheap stock. It pays a 1.7% dividend, and the sales growth is not very strong. In the last 4 quarters, it's been kind of on the negative single digits. And, in a slowing economy, this company will slow dramatically. It's attached to the economic cycle. The economy is growing, it grows. The economy is shrinking, it shrinks. So, I'm talking about its sales. So it's still a very good company. Return on equity is 28%, which is really high for a $36 billion company. So I kind of like it, but it's not now. It has to get a lot cheaper for me. Okay? You probably noticed that Justin and I are very happy about receiving 50 million podcast downloads, right? To celebrate, KPP Financial is giving away 50 free subscriptions to the KPP Premium newsletter. This is our 50 for 50 million. Thank you for helping us exceed 50 million downloads. So if you'd like to get a chance to win the free newsletter subscription, just follow InvestTalk on social media platforms like Instagram, Facebook, or LinkedIn. Then be sure to like and tag 3 friends on our 50 for 50 million post. It's pretty easy. We'll be picking 10 winners each week for the next 2 weeks. So follow InvestTalk and also tell your friends. The prize, if you win, is a 1-year free subscription to KPP Premium Newsletter. It comes out weekly, bringing you financial news and commentary and a couple stock ideas. The newsletter is normally about $199 a year. But you can get it for free if you win. So why not take the shot? Just follow InvestTalk on social media platforms like, again, Facebook, LinkedIn, Instagram. Then be sure to like and tag 3 friends on the 50 for 50 million post. Okay? This is InvestTalk, everybody. Hang on. More questions are coming up.
Mark your calendar for Wednesday, March 22nd from 2 to 3 p.m. Pacific Time. You are invited to a new KPP Financial Wealth Webinar. Value investing, positioning your portfolio for profitability, relative price, and dividend payments. Be sure to tell your friends and family members about the new KPP Financial Wealth Webinar. It's free, and you can register now at investtalk.com.
This is InvestTalk. I'm Steve Peasley, and we have one goal here, everybody, as you know, to help you achieve financial freedom. So we want to do that for you. And our work will continue right after this break. Get your questions in now, 888-99-CHART.
Everybody wants a secure financial future. That means you'll have finance and investment questions. InvestTalk. 888-99-CHART.
888-99-CHART. Let's go to Crystal in San Jose. Hi, Crystal.
Hi. Thanks for taking my call. I just question regarding Devon Energy, DVN. It looks like it has it came down quite a bit, and I want to know if you think it's a good value to get into.
I actually do.
Good company to get into.
It is a very good company. As far as the health of the company is very strong. It's $30 billion size. Devon is symbols DVN, Devon Energy Corp, engaged in exploration and production of oil and gas and natural gas in the United States and Canada. So, that I like that sector already because there's a lot of value there. They're going to pay, they're paying almost 11% dividend right now. Huge dividend. I don't know if they can keep it up, but they have the cash flow to keep it up, $11.74 a share, which is very large. Return on equity is very good at 54. And, it's a $46 stock, and we're going to make $7.27 next year. So that tells you it's what, a 6.5, 7 PE? and its range is 5 to 125. So it's at its low on its PE ratio. I like Devon. Yes, it's come off a high. Let's see, what was their high? $78.80 back in October, late October, early November, and it's come way down to 46 from there. Well, how far down is down? I think it's getting pretty close to being a bargain enough with that dividend yield that people are going to start buying it. So, yeah, I kind of like it. Thanks, Crystal. Appreciate the call. Thank you. Okay, France. France today decided to raise its retirement age for those people working for the government or if you're collecting benefits from the government, like our Social Security. They raised it from 62 to 64. It was kind of like an announcement by the president that was in France. It kind of took everybody by surprise. And I don't know, their citizenry are a pretty active group. They may be protesting that. But one of the problems is, just like us, they're spending more. They don't have the money. They're spent all the money. It's a big hole for the government, and they're trying to fill it. Just like we have that same problem here, maybe not as bad. Do you know what our average U.S. retirement age is? 64.9. Okay, so almost 65 years old. Indonesia, 68. Okay, 68. I think that's the highest in the world, 68 years old. And Saudi Arabia is at 60 years old. So, of course, they get lots of money from oil. The government is super wealthy, and it's one way to keep people happy, give them money, right? So anyways, that's France. Also, did you see what Warren Buffett did? He bought more Occidental Petroleum this last week. 8 million more shares. Remember, that's one of the companies he added. I think it was last year, and added in a big way, maybe a couple of years ago. Now, Warren Buffett also owns 4 banks, so he really took it on the chin, losing billions of dollars, not hundreds of millions, billions of dollars on his 4 banks. So I don't know how good is because of that. And of course he doesn't buy he buys pretty safe banks. He's pretty astute about doing that. So, but that's where he lost a bunch of money, and that's why you diversify your portfolio. Remember our rules. We have rules. We don't like people to buy more than 3 to 5% of any one stock in a portfolio, not more than 18% or so of any one sector. You can go up to 20% of your portfolio. So, there's rules that you should establish for yourself that you're comfortable with that make sense to properly diversify the portfolio. To get it in enough stocks. And how many is enough? Well, I think around 15 is kind of the minimum. You could own a few less, but they have to be really high quality. But around 15, we like to own 3% of any one position, so that gives us 33. But you probably won't have time to watch that many stocks and keep up with the news on all those companies. So we do. I'm Steve Peasley, and this completes another InvestTalk program. Justin Klein and I thank you for listening, and we encourage you to tell your friends and family members about our free podcast downloads. So get your downloads anytime, everybody. You get it at iTunes, Google Play, or Spotify. Please be sure to review and rate us on iTunes. Remember to follow us on InvestTalk on our social media. We would really appreciate that. You might win a free subscription to the KPP Premium Newsletter. We're going to give away more. All you have to do is like and tag 3 friends on our 50 for 50 million post. That's all you have to do. Independent thinking, share success. This is InvestTalk. Enjoy your weekend.
InvestTalk is a trademark of KPP Financial. Because of the nature of the interactive dialogue inherent in the format of this program, it's important for the listener to understand that not all comments made will apply to them. Specifically, nothing said shall be taken to be investment advice, or shall statements on this program be considered an offer to buy or sell security. Because such advice is rendered solely on an individual basis and at times will require that the investor review a prospectus before investing. InvestTalk is a copyrighted program of Klein, Pavlis, and Peasley Financial, a registered investment advisor firm which retains all rights. For more information regarding KPP's investment advisors, Call 1-800-557-5461. Steve Peasley is president, and Justin Klein is chief executive officer of Klein, Pavlis, and Peasley Financial. Thank you for listening, and your comments and questions are welcome on our 24-hour listener line at 888-99-CHART.